So I'm very new to this startup investing and all. And there are lots of time that, when I'm, looking for the presentations and all, I feel that I don't know or understand the terms or terminologies, where and how should I make a decision to invest in any kind of a startup, looking forward to understand what should be my investing horizon, what should be my, the gain that I should be making, how to identify those kind of stuffs. So for a beginner, it's very useful if you can talk about the processes of the startup lanes, which process the investing is done, how those decisions are made, a very basic of the entire process.
Okay, sure. See, so I'll explain you how a startup applies, and that will help you understand, how to evaluate. Like we evaluate, you can also evaluate as an investor. So the first step that we do is the startup applies with the basic problem solution, IM, investment memorandum or pitch deck. And then we evaluate whether the market size is big or not. First of all, we have to see the most important thing, that is the market size. If the market is small where the startup is operating, then definitely there will be problems. The growth will be hampered. Like I'll tell you, if anybody is starting an edtech in the domain for educating people how to avoid or do well in COVID, or if anybody is manufacturing masks, let it be asset light model. At this moment, then this market is small now, right? Now the problem and the industry. So you have to see what is the market size. If somebody is manufacturing, there was a device made for, the people who snore. That was very cheap, $2 device. And they started marketing, but the customer acquisition cost was coming higher than the revenue itself. So that is not a good idea. So we have to see market size, whether the market is big or not. Then we have to see the industry. What is the growth rate of that industry? If the industry overall is not growing, no matter how good the management is, no matter how good the product is, the performance will be low, because the overall industry is not having good margins, right? Like in the pandemic, edtech was growing very rapidly. Now edtechs are not doing very good, right? That is why investors are also not preferring edtechs at this particular moment. Hybrid model is more of in demand. So we have to understand the trends of the industry. The market has to be really big. Then we have to see how many competitors are there. If no company has become big in that particular domain, then people might think that it is good, or having no competition. No, it is not good. If you don't have any competition for your startup, as an investor, you should not invest into that particular startup, because that says that there is no demand as of now. Demand has to be very high, right? No matter competition is there, good. If you find out some companies controlling a large market share, then also it is very good. Provided that your startup is able to disrupt where you are investing, it should be able to disrupt either in terms of pricing. That means, suppose you start something against Netflix in competition with Amazon Prime, and you have similar kind of movies, content, and you start selling subscription at a lower price, say 99 rupees per annum. Then automatically you will be able to disrupt Netflix, Amazon, if the content is similar. More of convenience is also important. And then comes the product feature. Product has to be homogeneous, good, like the market leader. If the product is not like market leader, then there will be problem, right? Because like I'll tell you, there was a good example of Jio coming into similar product like Zoom. They even had same colors, same design, same UIs, everything was same. Only point was it was freezing. The moment more people joined, it had a lot of problems. So that is why the product did not survive. And that was the reason it did not work well. Otherwise, it was about to disrupt the market, because if the product is good and you provide it for free, then there will be definitely lot of uh, takers for that particular product. Okay, so we have to check industry, we have to check the market size, we have to check the trend, we have to check whether there are competitors in the market, then we have to check the execution capabilities of the team of the startup founders. If the founding team is able to execute and lead the startup, they have the vision, well and good. If you find people doing it part-time along with the job and not taking too much interest into it, then there will be a problem. So always there are various points that we check at StartupLanes, and we find out which startup will be good and suitable, and we only showcase 2, 3, maximum 4 startups in a month to the investors. So we are not like pushing many startups at one point of time, and that is how StartupLanes has 100% success rates. No startup has been busted, no startup has failed where StartupLanes has investors have invested. I'll quote some example of recent funding. So one of the recent funding that happened was Zapfresh. The startup was doing 72 crore revenue annual, uh, and approximately 1 CR we did in the initial round, through our angel investors. And recently they have got 50 crore worth of funding commitment from IFB. That is a Goa-based company. I'm sure it's a good brand. Everybody knows about it. So, uh, you know, automatically investors have got good jump after investing, and still we are taking in few investments for Zapfresh. But the ticket size has increased because IFB has come in. So ticket size will be minimum 25 lakhs. And similarly, Burger Singh, we did 30 crores of funding. And first ever chance was given to our angel investors. And, now they are doing very well. They were doing 85 crore revenue at the time they came to us. And, they are rapidly growing at the moment. So such kind of startups, if you invest, we try to give you better startups with good revenues, stability, and such kind of industries where the growth is like more stable, assurance is there, like food industry. We are coming up with a food restaurant chain which has 8 outlets right now in Delhi, and they are doing 50 crore plus from 8 outlets annual, I'm talking about, which is very good. Now if that company starts franchising, then it becomes really well for the franchisees. uh, they have got more than 1 lakh reviews per outlet. For only one outlet, they've got more than 1 lakh reviews at Zomato, which is huge. So getting 1 lakh reviews, it means they might have served more than 5 or 6 million orders, because out of 50 people, one person will write a review. So if they have served more than 5 million orders, it's huge. So we have to check all those data points, and that is how we bring that startup in front of you. We do the valuation, we do the due diligence, we find out the background, we find out a lot of things, and then I always try to meet that founder. I call the founder to Goa. I stay in Goa. I call them before taking that startup and understand their vision in a personal meeting, and that's how this thing happens, right? So whatever startup we are bringing, you can rely on our due diligence. We check their financials, we do the due diligence before taking the startups. Other networks I will not comment, but mostly it happens, the practice is that they do the due diligence after the funding commitments are there, but we do even before taking the startup. We don't accept a startup until and unless we are satisfied that this startup is going to do well. So that's most important. And the due diligence, the entire process of scouting an application and taking the startups which are doing only good revenues, that is our strategy. We do have startups which are into less revenue, but those are into different categories. We don't take ask investors to invest much amount into those kind of startups which are not doing good revenue.